Welcome to our presentation on the fascinating world of sacred geometry and trading. In this presentation, we will explore how the principles of sacred geometry can be applied to trading patterns, and how understanding these patterns can help traders make more informed decisions. Sacred geometry is a concept that has been around for centuries and is found in many ancient cultures. It is the study of geometric shapes and patterns that are believed to hold spiritual significance. In trading, sacred geometry can be used to identify repeating patterns in the market that can help traders predict future trends. Sacred geometry is a term used to describe the belief that there is a geometric blueprint that underlies the creation of the universe. It is believed that this blueprint can be found in everything from the smallest atom to the largest galaxy. In trading, sacred geometry is used to identify patterns and predict market movements. One example of how sacred geometry relates to trading is through the use of the Fibonacci sequence. This sequence is a series of numbers in which each number is the sum of the two preceding numbers. The ratio between these numbers is known as the golden ratio, which is believed to be a key factor in many natural phenomena. Traders use this ratio to identify potential turning points in the market. The golden ratio, also known as the divine proportion, is a mathematical concept that has been used for centuries in art and architecture. In trading, it can be used to identify potential patterns and trends in the market. The ratio is approximately 1.618 and can be found in various natural phenomena such as the spiral of a seashell or the branching of a tree. One way the golden ratio can be applied to trading is through the use of Fibonacci retracement levels. These levels are calculated based on the golden ratio and can help traders identify potential support and resistance levels in the market. For example, if a stock's price drops and then retraces back up to a Fibonacci level, it may indicate a potential buying opportunity. The Fibonacci retracement is a popular technical analysis tool used by traders to identify potential support and resistance levels in financial markets. It is based on the idea that prices tend to retrace a predictable portion of a move, after which they will continue to move in the original direction. The most common retracement levels are 38.2%, 50%, and 61.8%. To use the Fibonacci retracement, a trader first identifies a high and low point in a price move, then draws horizontal lines at the retracement levels. These lines act as potential support or resistance levels for future price moves. Traders can use these levels to enter or exit trades, or to set stop-loss orders to manage risk. Gann theory is a trading strategy that involves the use of geometric angles and patterns to predict market movements. It is based on the idea that price movements follow specific geometric patterns and can be predicted using mathematical formulas. One of the key concepts in Gann theory is the use of support and resistance levels, which are areas where prices tend to bounce off or break through. By identifying these levels, traders can make more informed decisions about when to enter or exit a trade. In conclusion, understanding the principles of sacred geometry can greatly enhance your trading strategy. By incorporating concepts such as the golden ratio, Fibonacci retracement, and Gann theory, you can identify patterns and make more informed decisions. Remember, trading is not just about numbers and charts, it's about understanding the underlying patterns and energies that drive the market. By tapping into the power of sacred geometry, you can gain a deeper insight into these patterns and take your trading to the next level. Thanks for watching. Like and subscribe, and we will catch you on the next one.